is Japan, and you are in the FOMC webinar sponsored by Global FX Club. Thank you very much for joining me. We are going to be covering a good deal today. This is probably really the last hurrah for significant volatility in 2013. As we approach the holiday season, most people, well, most institutional traders, corporations, banks, etc., they tend to wander away from their desks, do the family thing. So markets tend to slow down. This will be I would expect this week, and specifically this event and the reaction to this event will probably be the last really strong volatility we see in 2013, barring some sort of catastrophe or government issue in the U.S. So there's definitely some stuff we want to pay attention to here. Real quick, let's run through exactly what's going to happen today. At 2 o'clock, we have the FOMC economic projections, the statement, and the release of the funds rate. The rate's not going to change. It'll be the statement and the economic projections in that order in terms of significance. So we'll be looking in the statement to see whether or not the Fed has announced the beginning of the tapering of the quantitative easing program that's been in place for the last 5 or so years. We'll see to the extent to which they taper, if they do at all. And then we'll also see what kind of forward guidance we get regarding those whether or not, what kind of guidance we get going forward as to whether or not we'll see more in March or January. Okay, hold on one second. So there are a lot of different options here, which is part of the problem in terms of sort of forecasting exactly what's going to happen. And then, of course, at 2:30, we have the FOMC press conference, which will be Bernanke's last opportunity to sort of address markets before he's done, and presumably Yellen takes over. So the press conference will also be interesting. Depending on what we see in the statement, the press conference could easily undo all the price action that we see after the release of the initial statement. Think ECB type press conference material. So there's a lot going on. It's going to be a very interesting period of time. If you have open trades, I feel now is a fitting time to click over to the risk disclaimer, because I'm going to start talking about some risk management here. If you have open trades, especially if you have dollar trades, just be aware there's going to be a lot of volatility. This is a time to make sure that you have stops in place, because if you don't, things can get ugly quickly. If you're willing to have your stop in place and get stopped out, that's fine. Just make sure that this is not a time to abandon stops. All right. This could be very ugly with lots of whips in either direction. It could, we could see a dramatic move either way. We could see really very little. But I think the odds are probably tilted in favor of some volatility. So with that said, look over the risk disclaimer. And then we will jump to some charts to preview some of the more important things, I think, going into the decision, and then we'll go from there. Okay. All right, so let's do big ticket stuff. E-minis, okay? This is E-mini futures, so the S&P 500. We'll talk more about the S&P after the release. I'll run through some of the scenarios that we see for that. I just want you to note the levels here on E-minis. All right, about 17 up to 1790 is resistance. Your first support is 1750. Obviously, the major support levels down around 1700. I don't think we'll get anywhere. We won't get anywhere near there today, I hope. I would think, actually, I think if we did, circuit breakers would kick in, so we'd have to take a break first. 1735 is another support area. Right? So it does look like E-minis is trying to roll over a little bit here, but right now hard to get. It's been hard to get a little bit. It's hard to get pretty excited about bearish things on U.S. equities lately, as the tide just keeps rolling. So that's E-minis. If we look at the 10-year note, okay, it's relatively. I mean, it's down 1/3% today, which is not an insignificant move for bonds. So yields a little bit higher today, as people are expecting at least some sort of guidance as to whether or not when the taper is going to occur. This is the 30-year. It's down just over 1/4%. So again, some consolidation here on bonds. Yields marginally higher so far today. Let's take a look at the dollar index. This will be another heavily affected commodity or trading instrument, I guess, today. So this is the dollar index. Those are really the levels you're looking at. We need to get above 80.85 for really there to be significant upside. In the first major support, it's about 79.85. So that's the range to sort of keep your eye on here for the dollar index. Some of the other big things to take a look at: gold. Okay, gold's going to be pretty active today. Right now, it's up 0.7%. Major resistance is this trend line here. These are all 4-hour charts right now. I'll let you know if that switches. 1250 or so is the magic level to break to open up more upside. 1257 is this 200-period EMA here. So that's worth paying attention to. You can see a capped price back here. So whereas the support level is probably first off these 1226 lows, or you can see we held there, and then the trend line, which is about $1 below it, so 1225. So we'll see how that plays out, but gold has the potential to be pretty active today as well. Let's take a look at everyone's favorite currency, the euro. I say that with a small degree of irony. So the euro is actually, I mean, I've been making the same euro analysis for the last, 6 trading days because we haven't gone anywhere. But this is now a daily chart. We have this area here, all right, this 138.30 area. That's a 618% fib of the multi-month move from highs to lows, and we've held it now. Now we came back up. We're holding it again. It's euro dollar does look fairly constructive here on the daily chart. You can make an argument that this is some sort of continuation, pennant, or flag. The one thing that is worth noting here on euro dollar is exactly how well this 4-hour 50 EMA has held. All right, 1, 2, 3 really nice touches and rejections of that level. So that's the first really big technical level that you're gonna have to watch, and it's sort of formed into a trend line, which is nice. So that's below 137.33. If we manage to push below there, that seems to open up, at least a move down to test this 100-period EMA. That's 136.85, and then the major support area is this trend line down here at about 136.20. So those are the levels on the downside of euro dollar if we do see some dollar strength. If, on the other hand, we see the dollar weaken and see the euro pick up, first major resistance is this 137.80 figure, and then the 138.31 highs are going to be the next major resistance. If we do manage to push above 138.31, okay, that to me opens up a pretty decent amount of upside, at least initially. Let's go to the weekly chart. All right, you can see the significance of the 618. If we do manage to get above it, there's some room, all right? The problem, of course, is going to be what kind of follow-through we get with any of these moves. A lot of that will depend on exactly what the FOMC says. There are a couple different scenarios, on all of which have their own, presumed reaction, but it's really tough to say exactly what they're going to say, and then it's even tougher to know what the market's going to do initially and in the long term. So let's run through a couple of the options real quick. First, nothing. Fed could say nothing, do nothing. This is fairly unlikely. We will at least get, I would think, the standard, we're continuing to watch data and we're planning on tapering as soon as the data allows us. All right, that would be the worst case scenario for the dollar, and probably best case scenario for stocks. Probably. There's a caveat there. We'll get to that. That I think is unlikely. I think we'll at least see more guidance this time around, if not extensive guidance. But first option, they say nothing. Second option, they keep the usual, we'll taper when the data lets us. Not good for the dollar, probably good for stocks. Third option, they don't taper, but we get specific guidance. So for example, they say, we're not touching asset purchases now, but we're planning on doing it in January, or we're planning on doing it in March. Very likely, all right, they probably won't say we're definitely going to do it in January, but something along the lines of, data suggests like an imminent plan to taper, something along those lines. That's the neutral one. I don't exactly know what kind of reaction we're going to get from that. I suspect we'll see an initial dollar dip. All right, so we'll see euro dollar higher, Aussie dollar higher, pound dollar higher. And then I think the dollar will make a little bit of a comeback. The fourth option is that they taper a little bit. All right, 5 to 10 billion. No major guidance about when the next one's going to continue. All right, so if we see that, probably the opposite. We see initial dollar strength, and then it gets faded. And then the best possible option for the dollar long-term and short-term would be a 10 billion taper and hawkish guidance that more is coming in January or March. I would consider that to be unlikely. The most likely scenario, to my mind, is the no taper but look to January, or very small taper, no guidance as to when it will continue. So the middle two options. Those two options, for me, initially, my initial reaction going in will be to fade whatever move we get out of those. So that's what I feel the options are for the FOMC. We'll see very shortly what exactly we get out of them, but initially that's, I think, basically what we're looking for. So the ones you want to keep an eye on, you want to keep your eye on euro. You also want to keep your eye on kiwi. All right, this was the chart of the day I wrote yesterday, where I talked about we're holding the range going into FOMC, and it may provide a nice opportunity. We technically broke the range on that 1 o'clock close. Okay, we got a 4-hour close outside of this trend line. I should probably really fix the trend line, but it doesn't change anything. All right, you can see even now these jumps. That was a 9 pip jump. All right, and just a little blip, because markets are as illiquid right now as they can possibly be. You can just see everything just jumping around. So don't. This is not the time to be trading anything. Let's look at gold's dropping. All right. So kiwi, you want to keep your eye on that kiwi range. You also want to keep your eye on pound dollar. Okay, pound dollar broke out. I think 154.64 will be the next resistance, these previous highs. But I do think pound dollar is going to try to make it towards to break into new highs. So pound dollar is actually a very attractive one to buy a dip on. All right, so if we see initial dollar weakness, and I'm thinking that we should be fading that weakness, which only just will depend on the scenario. Pound dollar is a prime candidate to fade any dollar strength. Sorry, dollar strength, dollar pair weakness generally. So if we do see an initial dip on pound dollar, that may be a good opportunity there. Aussie is actually another one that I'm looking at. This would be one I would like to, if I want to sell the dollar, I'd actually think about selling it against the Aussie. We have some pretty significant divergence going on here on the 4-hour chart, and we're in this sort of general demand range. It's a counter-trend trade, obviously, as the Aussie's been beat up for, God, since at least April. But it's one that I'll keep an eye on for. Oh, whoa! Let's see, what do we get here? They tapered 10 billion. Man, I'm 0 for 2 on predicting the Fed. All right, so we did get a $10 billion taper. Dollar yen spiked higher, is dropping. Euro dollar just ate it. Kiwi eating it. I need to see the guidance before I'm gonna say anything. Euro yen holding in there, kind of split between the two. Obviously, dollar CAD spiking higher. CAD yen dropped 50.5 pips. Holy crap. Okay, so we're seeing a lot of volatility right now. Gold, watch gold here. If you trade gold, if you're in a position, if you're not, whatever, if you're long gold, be very careful here. If we see 1220 go, it would not surprise me to see gold dump like $80 by the end of the day. So be very, 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 very careful with gold right now. That of all the asset classes, that is by far the one that scares me the most. Well, actually, maybe silver, but silver, you shouldn't be trading silver in the first place. All right, so keep a very careful eye on gold. You can see it's still just cranking all over the place. Still need to see what kind of guidance we're getting in the statement. Further reduction in quantitative easing is likely if incoming information is as they expect. Let's see how E-minis is taking this. E-minis initially very unhappy, but really holding up very well off 1760. Oh, that's a good one. Let's see how our commodity crosses are doing. Okay, full text of the statement is out. I'm opening it now. Pound Aussie initially spiked higher. Pound Kiwi was actually a really nice setup, but I don't think it's going to be there anymore. I was hoping we'd see a little bit of a retest here down around 197.91, but we still might actually. Okay. We're seeing now some fading here. Pound Kiwi spiking lower. Kiwi dollar spiking higher. So the fade trade was pound dollar. I would look not to touch. I'm not touching anything until at least like 240. All right, I want Bernanke to at least start talking before I'm even thinking about touching anything. 163 would be the level I'd be looking at for pound dollar. Click back to your no questions yet. All right. So here's the voting against. Only one dissenter, and it wasn't George, who's the usual hawkish dissenter, was Rosengren, who believes that with the unemployment rate still elevated, the inflation rate well below the target, changes were premature. So one dissenter, that's actually moderately hawkish. Yellen voted to reduce, so that's she's the next boss, so that's one to watch. Continue. Okay, will likely reduce the pace of asset purchases in further measured steps at future meetings. However, asset purchases are not a preset course, and the committee's decision about their pace will remain contingent on the outlook for the labor market and inflation, as well as its. Okay, so that's mediocre. That's moderate. This is a complicated combination. So my hope was that we would see. If we were going to see a taper, my hope it would be the 5 billion option, the small one, and then neutral guidance, and that would be a fade the dollar reaction to me. All right, we got neutral guidance. They're saying it's data dependent on whether or not we continue to taper. We're planning on doing so, but it depends on when. Fine. But we got the $10 billion taper, which is not, I mean, in the great scheme of things, it's not that much more significant, but it does suggest a little bit more of a hawkish attitude. So I'm not 100% sure what we're going to see. We did see the initial reaction faded. All right, you can see here on pound dollar. We spiked down to about 163.40. We're now back about 30 pips above there. Let's see how hard euro faded. Euro faded pretty well as well. Off 137, we're up about 137.30 right now, so not great, but again, not really convincing. Euro pound sold lower for what that's worth. Aussie, we didn't look at Aussie. Aussie spiked lower. All right, this actually sets up a decent reversal opportunity for Aussie. That's one that you should put on your radar. All right, we saw Aussie spike below 88.30. We touched a low of 88.20, and now we're pulling higher. Think this sort of candle here. All right. If that's how if that's what this candle turns into, Aussie may be worth a punt long. I mean, we have 3 hours until the 4-hour candle close, which is good because it means Bernanke will be out of the way. But Aussie is definitely one I'm going to be keeping my eye on for a potential dollar short. I'd rather think of it as a dollar short than an Aussie long. Kiwi is now just stuck with a weird candle. Dollar yen major support, or sorry, major resistance at new highs at about 104.20. All right, that's the wedge high right here. You can see it. It'll be right about in this area. So that's worth watching. Euro yen making new highs. Nikkei also doing very well right now. This is the Japanese stock market. This is the Nikkei 225. Futures, it's breaking out too, which is validating yen paired gains. E-minis at resistance. All right, so we've seen a very interesting reaction here. Equities spiked down initially and are rallying. All right, CAD yen, same thing, spiked lower, rallying. Bonds, same thing, spiked. So we're seeing a very pretty across the board rejection of the initial move, which is interesting. Yeah, that's a good point. They're most likely everyone's keeping things in a range until Bernanke speaks, which is about 23 minutes from now. So the economic projections are also out. All right. So now we're seeing that reversal accelerate a little bit. You can see bonds. We're on the 10-year right now. You can see yields dropping as bonds rally. See euro actually now just turned green. Aussie turning green. So yeah, fade the initial reaction was the right idea. But I'm still wary because we still have Bernanke to get through. I'm not touching anything until Bernanke. Still low liquidity. Okay, you can see dollar yen reversing its gains. So dollar getting hit now across the board. Equities are up pretty high. Dow's up over 120, which I think is the opposite of what people may have expected. But you know, we're just fading the initial reaction, kind of like NFPs. Exact same thing as NFPs. All right. Are there any particular things you guys want me to look at? I have a list of things I want to look at through while we wait for Bernanke to speak. Are there any particular requests? All right, well, then I'm just going to go through what I had planned. All right, so I want to take a look at some different stuff. We're going to drift away. All right, so we're on daily charts right now. We're going to take a look at some of the more interesting, somewhat non-Forex related effects that are going on out there, mostly in stocks. But first, we're going to take a look at gold. So gold right now, we're now on daily charts. Slightly different setup. This is my equities chart layout, not my Forex one. So we have gold. Gold is pretty clear right now. It's battling here very nicely. You can play a daily breakout really in either direction here on gold. Like I said, I maintain if we do manage to break these lows on gold, if it's something Bernanke says or if just the market comes back and heads lower, be very careful about a gold flush. All right, 1179 is going to be targeted, these previous lows. So if we do see gold flush, it could be a fairly significant one on gold. So keep your eye on that. Copper actually looks very good here. So that is generally a good sign for other metals and risk. You can see we dipped down, held the 8-day moving average, now heading higher. So watch a break of these general range highs here around 335 on copper. The one I want to see here how, yeah, all right, that's kind of what I figured. So this is XLF, this is the financials ETF. I'll run through some of the individual financials in a second. This has the potential to be a very nice end-of-the-year trade, depending, of course, on what Bernanke says and how he finished the day. But financials have held pretty nicely here in this triangle, with this major 21 turning major support and this trend line providing resistance. We managed to get a daily close around 1246 or higher. We could see financials start to squeeze higher into the end of the year. Generally, the tapering is actually not a bad thing for banks. All right, a higher interest rate environment makes it easier for banks to make money on loans. So we've seen the banks react positively to signs of an oncoming taper. Now that we've got it, if we actually get equities as a whole moving higher, banks have the potential to seriously outperform to the upside. So I'd be keeping my eye on banks as a good leading indicator. Inside the XLF, all right, we have Bank of America. Again, very similar setup, held it. Now we're looking to break out on Bank of America. We have Goldman Sachs, a little bit less clear. Made new highs today, though, hit 172.84, so new at least 6-ish month highs, 10-month highs, actually. So new highs for Goldman. Morgan Stanley has that trend line to break. Citigroup is the worst looking of them, but same general idea. So banks trying to rally here, not getting universal follow through, but keep your eye on that XLF. If we do manage to break higher, that's a good sign for risk, and it may drive the usual risk flows. Yen pairs higher, dollar lower, yen lower. All right. The other I wanted to look at some of the bigger names. All right, so Walmart, we have a potential reversal candle forming here. Walmart's been beat up the past maybe 2 weeks. The ones that people like to look at, Apple, all right, holding its first support level, needs to get back above 560, and we could see an end-of-the-year rally. If we do see that on Apple, you want to watch the NASDAQ. So this is NASDAQ futures. We have a potential kind of sloppy head and shoulders here that didn't really play out, at least not right now on the close. So watch for a squeeze on NASDAQ higher, especially if we see Apple bounce and if we see Google manage to break back within that channel. All right. So there's some potential here going into the end of the year for equities. E-minis are still bearish here. Or they're at least, I mean, worst case scenario, they're neutral. We're retesting this resistance again. We had a chance to get lower, we spiked higher. We also had a chance to get higher, and we're holding lower so far. So E-mini bears not willing to give up yet. A lot will need to be seen on what exactly Bernanke decides to do. So keep your eye on E-minis. The resistance level is basically this high, 1789, 85 or so. And then support is somewhere a 4-hour close below 1760. All right, so let's go to some currency pairs. Daily charts of currency. Actually, I'll go back to my currency setup. Let's click down to the daily chart. Okay, so Kiwi is ugly right now. Until we get back below that trend line and close it, that'll look really nice on the daily. Aussie dollar, like I said, potential reversal candle setting up on Aussie. I want to see how the day closes. If we do close Aussie in a reversal candle down here, I'm willing to take a stab at a long. That's a big if right now, so watch that. Aussie CAD, all right, starting to break a little bit to the upside, helped by some dollar CAD weakness. This is dollar CAD daily. Daily close up here looks very bullish for dollar CAD. Pound dollar looks good here. Got to watch these 164.64 highs, like I said before. But I think pound dollar is going to 166 at least. The question is whether or not we'll get an opportunity for an entry, because right now there really isn't one. You can see we held this line very well. We had that stronger than expected employment report this morning. That's boosting the pound generally across the board. Some of the other pound crosses, though, there's some potential on. All right, this would be a nice daily triangle breakout here on pound kiwi. It's a volatile pair, and you'd need a pretty significant stop right now, but, I mean, your targets are, you have about a 400 pip profit target pretty easily. So just reduce your leverage and keep your dollar risk the same. You can risk a few more pips and keep the setup. Or you can wait for a test of 198. We very well might get it. So watch pound kiwi. Pound Aussie has kind of run away from us. I don't really see a particularly great setup in pound Aussie. Euro Aussie, major trend line support. First level is about 153.48. Second level is about 150 basically. So those are the two levels on Euro Aussie. To me, not really a particularly good trade on either of those right now. Euro Kiwi, same thing. It's just pretty choppy here. All right, you can kind of do something like this, all right, and maybe try to play that breakout, but I think there are a lot better options out there than Euro Kiwi right now. So really, of the commodity crosses, pound Kiwi. Pound CAD, also worth looking at, all right. Very strong candle today. Nice two-candle reversal pattern forming here. This would be a daily close above a trend line resistance. So you could take that long, set your stop a little bit below 174. So again, another kind of wide stop, but you have some fairly aggressive targets on this one as well. So you can keep your eye out on pound CAD as well. Euro CAD, I tried to short this earlier today, got stopped out. It looks like it's going to continue to drive higher. I had higher expectations for dollar CAD resistance than ended up playing out. Dollar CAD kind of gave it up pretty easily, and the euro has been stuck. So you can see Euro CAD pushing to new highs here, breaking above 147 actually. No real setup on this guy either. I mean, you could, depending on how we close here, sort of chase along a little, but it would be a little bit chasing. You can see we have some daily divergence. All right, and we're oversold, we're overbought. Neither of which are reasons necessarily to short, but it may caution you against chasing along up here. So Euro CAD kind of out of the game as well. Euro dollar. We're going to have a very interesting candle here on Euro dollar on the daily. It is a 100 pip candle, almost exactly. Let's see. The high of today's candle so far, 137.97, and the low is 137.02. So we have a 95 pip candle here on Euro dollar, and it basically accomplished nothing, which is always fun. I've been saying for quite some time that the range on Euro dollar is 138 to 137. I never quite meant it to be that literal, but that's exactly what we got. We played the 137 to 138 range. Top side, bottom side, got everyone's stops out of the way, and now Bernanke gets to choose which direction he sends Euro dollar. Euro dollar, the upside break is above 138. Could be worth a long. The downside break, you kind of need to see it on the 4-hour chart. All right, it's below this 50 EMA here at 137.33. Let's take a look at dollar Swiss, which I bet is also just goofy looking. Not as bad as I would have thought. All right, so this is a daily chart of dollar Swiss. Basically, it's still range bound. All right, we spiked up to test these previous highs around 89. We're now falling lower. The support is 88.31. So that's the range to continue to play on dollar Swiss. There's not a lot else to do there. Really, dollar Swiss needs to break this trend line before I can really get aggressively bullish dollar Swiss. Euro Swiss trying to break out. All right. I mean, if you're a fan of trading dollar Swiss, Euro Swiss, I am not particularly. But it does look like a decent long from here if you're willing to just sit and stare at paint dry for a while. Aussie Swiss. There's the trend line that Aussie Swiss needs to break. A little bit easier to play than Euro Aussie. All right, kind of this little wedge action, so you could try to play a daily break out of that. RSI is at 17, which is fairly extreme. Again, no guarantee of a bounce, but it is just sort of worth noting. Kiwi Swiss is ugly. Most Kiwi pairs are ugly. CAD Swiss broke to new lows. All right, so I'd be cautious about doing anything with CAD Swiss. CAD in general not looking particularly great across the board. Even CAD Yen is not doing well. I mean, it's doing fine, but relatively speaking, CAD Yen is still my favorite yen pair short. Major support on CAD Yen 96.20 or so below there, and maybe things start to get a little bit interesting. Aussie Yen broke, spiked. Now we'll see. There is some breakdown potential here on Aussie Yen if we manage to reclose again below this channel type thing here, but still not my favorite. Kiwi Yen is a little bit more clear, actually. This is a good one to look at on the 4-hour chart. Okay, so Kiwi Yen. Don't want that. All right, Kiwi Yen tested resistance, not quite managing to break out yet, but if we do manage to get a close up here after Bernanke's done talking, that may be worth a continuation long. All right, just continuing to play this uptrend here on Kiwi Yen. We are nearing these 86.4 previous highs. Okay, so that is your first target / resistance area on Kiwi Yen if we do see a breakout higher. 86.4, which is about 100 pips from market. It's exactly 100 pips from market, actually. So decent upside, but not particularly great. All right, only 100 pips before you get to recent highs, and that's not as wonderful as it could be. Let's look at some of the odder dollar pairs here. Dollar Swedish krona, worth noting that is still holding its supporting trend line pretty well. All right, so this is one that you want to keep an eye on. Even if you don't trade Nordics, when they're strong, the dollar tends to follow them stronger. All right, so keep your eye on those trend lines there. Above 6.6 could really accelerate some upside. And then, of course, if we do manage to flush these lows here below 6.5, we could start to see a little bit of a sell-off. So that was Sweden. Now, if we look at Norway, Norway does not really look quite as good. You can see we broke down here out of this support, below the supporting trend line, held up by the 200 period EMA here on the 4-hour chart, spiked higher, spiked back lower. Now we're stuck between the 50 and 200. We played that range actually perfectly, touch to touch. So we'll have to see how exactly we close, whether or not we close back up within this range or whether or not we manage to break down below these previous lows. Obviously, break to the upside bodes well for the dollar. Just for fun, Turkish lira. This is a pair that I have traded successfully in the past, though I have not traded it that recently. Okay, pretty actually nice ascending triangle going on here. Major support is 2.02. Major resistance is 2.06. Looking for a breakout really in either direction there. The lira did hit new lows against the euro today. So we'll see if the dollar manages to follow that higher. Euro pound. We're about 5 minutes away from Bernanke starting to speak. Euro pound. So this is where I'm big on trading cross pairs like euro pound based on how their components look against the dollar. So I trade euro pound based on how I feel euro dollar and pound dollar look. And this is one case where my views for euro dollar and pound dollar conflict with what I'm seeing on the actual cross pair itself. All right, so here we have euro pound retesting an inverse head and shoulders neckline here, pretty nicely after the spike lower off of the UK employment report, which was not as good as the reaction seemed to merit. It was a slight beat, but it was still not as good as last month's, but we'll see. Right now we're testing this support level, which, I mean, if you were wanting to play this aggressively, you could play along here pretty easily off of this support. The problem I have with that is how good pound dollar looks, okay? It's breaking higher. It's coming up to test those new highs. It's going to eventually, I would think, flush the stops above 164.64 and head towards 166, whereas I'm less convinced, all right, that the euro is going to be able to do that. You can see the euro still has not cleared 138, still fading a little bit lower there. So a little bit not as convinced about euro pound as far as the cross rates go. Let's see. Pound Kiwi has some potential here. All right, remember I said we could look for a move down here to replay this triangle. Pulling back from 2, I don't know what it's going to do from here. This pair can be crazy. We may see some consolidation on that. Let's recheck on gold. Gold still stuck in the range. So all that volatility is sound and fury signifying nothing. We mostly just stayed in the previous ranges, which says to me that more so than I would have thought, the market was expecting a taper. Dollar CAD pulling back a little bit here. That's an ugly candle we have forming on dollar CAD. As we're about 3 minutes outside of Bernanke speaking. Looks like round 2 of dollar selling getting started here. Not so bad against the euro right now. Again, pound drifting a little bit higher. I guess we need to redraw this dollar yen trend line here. Something like that now, I guess. Not perfect. Bonds moving higher here, which means rates are moving lower. Yeah, both the 10-year and the 30-year. Let's see. Correct. Okay. All right, so we see yields moving higher, which probably, or sorry, yields moving lower. Equity is still capped by resistance a little, all right, but starting to push through. Euro is still really kind of underperforming here. It just does not want to get above 138. Both Aussie and Kiwi are interesting here. Kiwi resistance is now 83. Aussie resistance is 84, 80, or sorry, 90. 90 is Aussie resistance, but still worth watching that daily candle here on Aussie dollar, right? There is some potential going on there, but we still have Bernanke in 1 minute. 1 minute till Big Ben. So let's see if Big Ben's going to say anything interesting. All right, so the press conference is starting, so we're going to see what Bernanke does with the press conference. If you have questions or requests, please feel free to put them in the box. We'll let Bernanke start to speak. We should get some sort of a reaction pretty quickly, all right, off of Big Ben. So still quiet. Economy continuing to make progress, but still not in great shape. We know this. Okay, you're seeing Aussie pick up a little bit. Job market continues to improve. Unemployment rate is still elevated. So right now, the unemployment rate is at 7%. 6.5 is the most recent target we've seen. Let's see what. Okay, Bernanke continuing to express concern about inflation. Again, this isn't new. We know that the Fed is concerned about the inflation levels. They remain persistently low despite what is basically the Fed creating billions of dollars every week. Inflation remains low, which is not a great sign. It's a major reason that I think many people, myself included, expected them to hold off on tapering this month because they can, because inflation is fine. It's actually, lower than I think that most people at the Fed would like it. So you see Euro creeping a little bit, but right now it doesn't look like anyone's in a big hurry to react to Bernanke. FOMC participants expect growth to pick up over the next few years. They've been expecting that for several years now, and has yet to materialize. Back to pound Kiwi. You see pound Kiwi moving lower. All right, so depending on how everything plays out for the rest of Bernanke's press conference, roughly 198.20, all right, is an opportunity to try to stab long at pound Kiwi, which I like. Because I talked about why I like pound dollar higher, and Kiwi dollar still has that major 83 resistance to go through. So it's worth keeping an eye out on, but I don't know. It depends on how much you really want to get involved this week, especially on an already crazy pair like pound Kiwi. That's kind of going to have to be your call. Surprising to me, surprisingly muted reaction so far to Bernanke. I don't know what. I mean, I guess the big question would be a timeline question. When are you going to taper more? But I don't know when we'll see that. Euro's climbing up above 138 now, so keep your eyes on that. Gold still mostly unchanged, which is interesting. I would have expected gold to be one of the most chaotic instruments today, but apparently not the case. So Euro's creeping up back into that 138 whack-a-mole range. All right, it comes up towards 138 and it gets hit lower. So far we haven't seen it get hit lower. If it does manage to keep creeping higher, that 138.31, all right, that's going to be the magic number. If we manage to bust through there, then I think we're going to see a significant amount of short covering. All right, so you can see dollar Swiss diving back into its support as well, around 80.30. We are 12 pips off the lows, the recent lows here on dollar Swiss, so that's another one that's sitting right at a key level. Pound dollar has broken to new highs, okay, so I did get that. Still expecting 166 on pound dollar. I mean, barring Bernanke saying anything dramatic, which he hasn't yet, sooner rather than later. Dollar yen off quite a bit. All right, so this is a dollar move. And you can see the Nikkei isn't really as much lower as dollar yen is, but yen has pulled back somewhat from its highs. It touched a high of 103.67. It's about 40 pips lower. If you're the only way to really think about getting short dollar yen is if we clear 102.67 though, so we still have quite a ways to go. It's still very well supported right now. Yeah, this is E-minis again. This is going to be a nasty daily candle. All right. Held first level of support very well. We're breaking back into that wedge, so it seems like E-minis likely to retest these highs, assuming we can close up here, which is still not guaranteed, but we did see an initial move and a fade, so it's hard to see. It's not sure we'll see a fade of a fade, I guess. Bernanke now talking down rates, that rates will continue, low rates will continue even after the 6.5% employment is hit. We knew that, we know that. That's not news. So that's actually worth looking at. So this is the VIX, all right, the so-called fear gauge, the volatility index. You can see the VIX dumped, all right. A lot of that is going to be just low liquidity as people go home. But a lot of it is also the fact that, we see E-minis up 21 points right now. We see NASDAQ up 0.5%, all right. Apple, pretty nice reversal candle going on here. Walmart, XLF, all right. So we did get that breakout on financials. All right, so that is a good sign for equities. Definitely worth paying attention to that Finnies are doing so well. You'd like to ideally see them close the day up here to suggest further highs, and it might drag the rest of the market with them. Again, we have 2 hours left. We have some questions from Bernanke that Bernanke is going to have to answer, but you can see that this little dip down took us right to this 50-day EMA here on XLF, and it had held this 50 back here, and now it looks like a launching point for maybe 23 or even 24. So that will be worth watching. Aussie dollar will be worth watching. The daily candle right now is productive, maybe not good enough quite yet to warrant a long, but worth watching. If you do get into a long Aussie dollar position on this reversal candle, you want to be pretty aggressive with trimming because this is a fairly established downtrend. 89.82, all right, it's about 60 pips higher. That is the first resistance area. The major resistance area is going to be up here at around 91. all right, the top of this trend line. Only a breakout of this trend line, okay, even comes remotely close to threatening the established downtrend. But if we click out to the weekly chart, all right, this is not an insignificant level for Aussie dollar. This is a major weekly low, all right, dating back to July 2013, so earlier this year. So, you know, this is not an insignificant level. There are a lot of stops, I would guess, piled below 88 that we may have maybe wanted to take a run at. We only got to 88.20, but we did make a new low, all right? So we probably did flush out some people who had their stops below this previous monthly low. So just sort of be wary about Aussie here in either direction, all right? Established downtrend, but we are in a major supply area. So keep your eye on Aussie. I think it's worth watching. Keep your eye on dollar CAD too. This is turning into kind of a false breakout type situation here. This is another ridiculous candle. Let's see here. This is a relatively low volatility pair, and we have a 106.89 high and a 106.08 low. So we have an basically 81 pip candle here on dollar CAD. This one is still up for grabs. Kind of depends on where we close on dollar CAD. We spiked down to touch this 50-day. All right, we touched, like I said, a low of 106.08. So we'll see if we manage to get higher from here, if dollar CAD throws in the cards. Major support on dollar CAD is now 106. Below 106 could see some selling. As terms of the upside, I'd really like to see the 4-hour close above 106.50. So really only about 6 pips from now, but we'll see from there. All right, it doesn't look like we're going to get much out of Bernanke here. All right, so he says his expectations is for moderate steps. All right, so through most of 2014. So we'll apparently be continuing to see tapering through all of 2014. They can slow it if necessary, which is like, you know, they can do whatever they want. Expectations that they may taper at each of the upcoming meetings, but of course this is no longer Bernanke. We now have to listen to what Yellen says. All right, Yellen hasn't actually been confirmed yet. Speculation is that vote will be held on Saturday, but she's pretty much as good as in. So it will be up to Yellen really to see what we get going forward. Yellen, one of the more dovish members. All right. Not that Bernanke was exactly a hawk, so it will be interesting to see. I think January will be very interesting to see what Yellen does. But Bernanke wanted to get it started, so he's going out with a bang, that's for sure. You got to give him that. All right, questions, pairs you want me to cover, commodities you want me to cover, stocks you want me to cover, anything like that. What about gold? At what point do you mean? If we continue to see further tapering? I mean, the expectation would be that we'd see gold continue to move lower, but it's held up pretty well today. So basically nothing acting as like you would expect, just hearing the news. Still watching it. I still think gold, at least technically, is pretty clean right now. This candle is actually really nice. Let's see, it's a 1244. It's only a $24 candle. That's not that ridiculous for gold. But it did manage to touch both ends of the range very nicely, all right? So it just fell short of this trend line, and it just dipped below this trend line. But mostly for gold, outlook is still the same. Watch this consolidation and then play the break in either direction. I'd like to see a 4-hour close above 1250 for longs, and I'd like to see a 4-hour close below 1218 for shorts. And again, if we do see a dip below these lows, the move down towards 1179 may get pretty aggressive. All right. I would suspect that we have stops here. All right. So be careful for that. Kiwi yen, that is a good one. Let's see what it's done lately. All right. So Kiwi yen trying to break out has not succeeded. This is another one you want to keep your eye on. I will actually likely pass on this long if we do see it break, even if we do see it break out of this triangle, just because we have these previous highs back here, only 100 pips higher, kind of limits your upside a little bit. But Kiwi yen is trying to break out of this little small triangle right now. So we'll have to just sort of see how that 4-hour candle closes. Again, it's about 2 hours and 15 minutes until the 4-hour close. So Kiwi yen worth watching. Definitely worth keeping an eye on. CAD yen, also kind of worth keeping an eye on. It's a little bit less convincing right now. It's basically CAD yen is relatively unchanged. All right. We'll get rid of that trend line. It's basically now just between 96 and then these range highs between 97.45 and 97.70 or so on CAD yen. So rallies can be faded, dips can be bought, and you can just play that range until we see a decisive break in either direction. Euro yen, higher but hasn't made new highs yet. Pound yen has made new highs. Pound yen is actually an attractive long here. All right, if we get a 4-hour close, basically anywhere above 169.75, which gives us about 25 pips of leeway, could be an attractive long here. We do have some divergence here on pound yen, so that's kind of worth noting. But in general, in terms of the breakout, this is a little bit cleaner and it has a little bit more room to run. All right, you can see we are already making new highs, but we are significantly overbought on the weekly chart, so there is some concern there. But at least for a couple, maybe 70 pips or something, you could maybe give pound yen a shot to the upside. Other requests. All right, so one piece of good news is that, well, not good news, but, well, kind of good news for consistency. According to Bernanke, Yellen was fully on board with the decision today. So that at least bodes well for consistency. Without even looking, I can tell you that I hate Aussie Kiwi, and that I don't have any desire to trade it. But if you are determined to put yourself through that, I have a hard time selling it here. Just in general, I have a hard time finding entries for this kind of move. I mean, you could short it against this ascending trend line. I would rather try to play a breakout here for a dead cat bounce type thing. As long as basically as long as 110 holds, bear trend is fully intact and raring to go. Only a move above 110 really threatens the Aussie Kiwi bears at all. Short term, a move above 108.15 would probably give bulls some hope. We may manage to see a small bounce there, but you have all sorts of resistance layered above that level. So any sort of significant bounce you'd have to view as being a selling opportunity, at least until we get a 110. I'm still expecting a pretty aggressive. I'm still expecting a moderately aggressive rally in Aussie Kiwi eventually, but it's not managed to happen yet. And to be honest, the ECB, or not the ECB, the RBNZ is not helping itself. So Basically, that's how I feel about Aussie Kiwi. I don't want to. I hate trading it. I haven't traded it in forever. But if you want to try to play a small breakout to the upside, or if you want to wait for a rally up towards 109 and then try to fade it, I think that's also a good play on Aussie Kiwi. Yeah, I mean, if we click out here to the weekly chart, all right, you can see we're not, we continue to press into new lows. Let's pull out even further. Let's pull out to a 20-year chart and do monthly. Okay, so we are diving here. This is the panic low. Oh, no, it's not, right? Where are we? Yeah, October 08. So, yeah, basically. Yeah, we did see a strong bounce down starting at 106.30-ish, 106.25-ish. So still 140 pips lower before we hit that real support. And then even then, I mean, I don't know how much validity you want to put into this candle, but certainly you would think right around between 106 and then 104.30. That's where we based previously. We may be in for something like that again. On Aussie Kiwi. So, yeah, like I said, keep an eye out on it for a potential reversal, but right now I don't see anything that really makes me want to trade it at all. There are some great short trades that, we saw back here. This was a beautiful, beautiful short that I didn't notice or take, but after that, it kind of has just been so beaten up, it's been difficult to really trade in either direction, unless you just sold it and hope for the best. All right, other requests. Yep, of course. All right, anything else? Doesn't look like. Let's see where euro is now. Okay, so now the euro died again. So, welcome to the markets. Dollar CAD re-breaking out. I don't know. Maybe I should find out what he said, if anything. Yeah, so it just faded again. It doesn't look like he even said it, other than like the Yellen agrees type thing. Pound pulling back from new highs. E-minis pulling back. Kiwi falling pretty aggressively from that 83 resistance. Aussie also dipping, not really a convincing candle right now. Aussie CAD falling. So again, just a dip of a dip. I wouldn't touch anything till the 4-hour close. See where things lay from there, and then kind of just go from there. All right, anything else? All right, I'm going to wrap this up. The recording will be posted as soon as it uploads. May take a while, but you can keep an eye out for the recording in case you miss something. Yeah, basically the only thing is keep your eye on gold and watch out for a flush there. Yep, I hope you guys have a great rest of your day and week, and enjoy your holiday season. Remember, everything kind of gets quiet now, so enjoy your time. Don't force anything, and I will talk to you guys soon.